Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Monday, the 19th of February. My name is Russell Shaw. I'm a senior market specialist at FXCM. And before we get into the live stream, I'm going to go ahead and bring up our disclaimers, starting off with our high risk investment warning. I'm just going to mute because I have a cough. Beg your pardon. Okay. Hey, Raj, good morning to you. Hope you had a good weekend and welcome. I'll just keep this on screen for a few moments. All right, bring up market commentaries disclaimer. I'll keep that on screen for a few moments. Hey, Mia, good morning to you and welcome. Hey, Anna, good morning. Welcome. Hope you had a terrific weekend. All right, let's take a look at the real rate and see how it's looking as we start the week. Okay, this is the real rate on the daily. What we've been looking at is the correlation. Hey Kim, good morning to you. We've been looking at the correlation between the real rate and the US dollar. It's typically where we start the analysis. The latest movement in the real rate is sort of this northeast type movement. So it's moving higher, and of course it's taking the US dollar with it. What we have said is that it's a bit odd in terms of the risk markets. The risk markets one would think as the real rates move up that the risk markets would be feeling some sort of drag, but that's not the case, and it's most likely because the numerator of our time value of money equation is really what's sustaining the market. Hey, Katie, good morning to you. Let's just clear off all the drawings. Okay, so we'll remove all the drawings. And if we just zoom in, I want to take a look at this on a weekly basis in a moment, just to get a very, very near-term, short-term perspective. We do have the real rate moving down over the last, let's call it the last 3 trading days, and US dollar feeling that as well. So, okay, so just that's very, very near-term. So there's still tight correlation there. But to start the week, let's try and get some sort of sentiment. Let's try and get some sort of sentiment movement. Is my voice breaking? Is my voice breaking? Mia's just saying the voice is breaking. Can I just confirm with the rest of you guys? I'm going to just go on to the weekly in the meantime. I have got a fan on. Maybe that's sort of interfering as well. I've turned the fan off. Does that help at all? Just let me know. If it doesn't, okay. All right. Let's go through to the weekly. Let's go through to the weekly. And all right. How are we starting? So this is last week's. In terms of the start of the week, the real rate is sitting in uncertain territory. It has been moving in that northeasterly direction, but if we look at the actual candlestick, it is a doji. And that makes sense. I'll tell you why I think it makes sense. It's because the idea is that over 2024, rates will be coming down. But having said that, the rates are getting pushed back. So we're getting pushed back from March to May. Now May is very much that's very odd. Okay. If it persists, I'll turn the camera off. If it persists, let's actually just turn the camera off. I've got all 4 bars. Let's keep going. If there's still some sort of sound distortion, let me know. I'll turn the camera off. All right. So the idea here is that 2024 we are expecting yields to come down, but it's getting pushed back. March getting pushed back to May, May getting pushed back to June. So I think there is a sense of uncertainty that's coming in. It is interesting that we have got this candlestick. We have got this candlestick on the dollar showing some sort of inverted. Let's not call it inverted. Let's call it a selling tail. Perhaps some sort of gravestone doji. Gravestone doji the week before, gravestone doji last week. It does seem that the dollar may be losing some sort of momentum, may be heading into a movement down. This is very much speculation. Let's just go through to the weekly chart, take a look at the US dollar on the weekly chart. Given the fact that our real rates are showing this uncertainty because of the doji here, okay, because of this doji. Right, let's just go through to the dollar and get some sort of idea of what's happening to the dollar on the weekly. Okay. Okay. Gravestone doji, then last week's gravestone doji. Now a little bit of red that's starting to manifest. I'm going to move this line up to last week's low. And if we break below last week's low and close below it, and we'll only know that at the end of the week, okay, then perhaps some sort of correction coming in here. There's no doubt the dollar does look supported. Let's just unpack the fundamentals that we can see here. We can see that it's on top of that 30-week exponential moving average. That's this black exponential moving average. You can see that black exponential moving average is pointing up slightly. So there does seem to be some buoyancy there. My preferred scenario, and I'm not sure if this is blinding me or not. In other words, am I getting sort of an emotional filter in front of me? My preferred scenario is that the dollar actually comes down over 2024. Why would I think that the dollar is going to come down during 2024? It's because I think the rates are going to come down in 2024. But the fact that the rate cuts have been pushed back, as we said, March to May to June, well, that's got to be supportive of dollar. So given the fact that we are on this 30-week exponential moving average, and we did have some selling pressure coming in, we can only ask ourselves, is this perhaps an opportunity of a sort of buy the dip? Let's just go down to the daily. Let's see what the daily chart, see if the daily chart's synchronizing up with the weekly chart. Okay, so bear with me while I bring up US dollar daily. And here we're looking at the zones. Okay, here we're going to be looking at the zones. Okay, so this is US dollar. You can see here is the resistance area. We put resistance area in maybe 2 weeks ago. It kind of has put a ceiling on how high the dollar can go. Then on the 13th, there is this big movement up. it comes down, and this was the 30th was CPR. So that was the CPR number that came out stronger than expected. And I just wonder now if that resistance here is turning into some sort of support. So that's what we call the principle of polarity, where resistance becomes support, support becomes resistance. So maybe we've got some sort of polarity principle there. What can we say about our momentum? Well, it's looking quite strong. It's moving above 50. Okay, let's just make this easier to see. I prefer rather than extending it right, that we just have the box. So we've got the RSI above 50. Above 50 is positive momentum. So let's just reiterate what we've spoken about. We've spoken about a real rate, which is looking almost ambivalent because of that doji. So we've got to see if that carries on creeping up. If it creeps on up, it takes dollar with it. We've taken a look on the weekly. There was some pressure on the US dollar last week. That's led to a pullback, and that pullback seems to have pulled back into support. And now it's worth seeing if there is going to be a dip in the trend. Let's go down to the hourly, see what kind of setup we are getting on the hourly in terms of our timing. All right, so let's bring that up. Okay, so but RSI is pointing most definitely down. Let's go back. That was on the daily. Okay, so Anna's just saying it's pointing. Sure, it's pointing down. That's not surprising. Pointing down because we've had the last 3 days have dipped, right? They've dipped towards that support area, but it's still above 50. Okay, so the fact that RSI is above 50 is not going to preclude it from ebbing and flowing, from zigzagging. It's not going to preclude the RSI from moving up and down. As long as we're above 50, we're on the bullish side of the indicator. If we drop below 50, we've gone onto the bearish side of the indicator. Remember, what we're looking for here is effectively a dip in the uptrend. So that would seem to suggest a movement down in the RSI, but the movement up, but sort of the support potentially kicking in. It doesn't mean that we're definitely going to catch on the support. We can go through the support area back down towards zone 3. So in other words, so I'm just seeing right here, when can we discount the bullish weekly reference candle on real rates? I'll take a look at that now. I'll take a look at that in a moment. I think the real rates, as far as the real rates are pointing up, we're moving in that northeasterly direction. And that's why potentially the dollar gets pulled up with it. So the dollar gets pulled up with it. We'll take a look at it again. But the idea is, how do we know if we're going to get the, how do we know if we're going to get support as a key reaction level? How do we know that the RSI isn't going to dip below that 50 level? And the way we get that is we're going to use the RSI the RSI is derived from price. If price is moving up, the RSI would move up with it. It's just an easy way of seeing the momentum. It's visually easier, but it's derived from price. I like it because of the sort of visual appeal that it has. But the idea is, what happens if the support doesn't catch? What happens if we do go through support? What happens if the RSI goes below 50? Well, that is possible. That is possible. So we'd go down to the hourly chart, and what we would do on the hourly chart is we would see if there is going to be some sort of signal on the hourly chart. What are our signals? Well, the signals are triggers. We call this a dual trigger system. So we would need to see the EMAs tick up. Okay, we would need to see the stochastic tick up. So the stochastic has ticked up. We just need to see the EMA cross over. Does that, of course, guarantee that we're going to get support catching? And the answer to that is no. It certainly does not guarantee that. We would need to see the stochastic move up towards that upper quintile, and then we would have the support kicking in. So the idea is, let's try and analyze this from a top down. So we go through to the weekly. We are above that 30-week. We've got that 30-week pointing up. We've got some sort of loss of momentum, and now some red that's kicking in. Is this perhaps a dip in the uptrend? Well, potentially. That means that when we take a look at the daily chart, we look at the support, and again, we're not looking at that in isolation. Then we go down to the hourly and look for the tick up. Now, what happens, Anna, if the stochastic stays in the lower quintile? Well, that means that the RSI is in danger of breaking below that 50, isn't it? So does that make sense? Does that explanation help? Yes, of course, RSI is pointing down. But the idea here is we're still above 50. Now we're hoping that the support is going to catch, which is not a hard, fast guarantee. Okay, let's take a look at euro, just while we're doing US dollar. Let's go ahead and bring that up. Okay, just let me know if that explanation helps. Before we look at euro, let's just take a look at the real rate, see if we can answer Raj's question. And the question is, when can we discount the bullish weekly reference candle? When you say discount, Raj, just try and rephrase it. What do you mean by discount? So this is the, let's get rid of dollar. This is the real rate. Here is the bullish. Here is the bullish reference candle. Let's actually take this. Let's just take this out. Let's put this one in. Okay, so here's the reference candle. Here's the reference candle completing. So that's 2 weeks ago. So it closes above reference candle's high, and it effectively is suggesting, well, we might have a swing here. We might have a swing here because reference candles have to be present at swings. They don't necessarily lead into swings. Now, this is the key, Raj. I don't know if there's going to be a swing here or not. I'm of the opinion that we probably ultimately head that way, because I think that over the course of the year, rates come down. So I think ultimately we do move in the southeast direction. But the technical signal that you and I have at the moment is that it's moving up. Now, I don't know if we're going to move up. Remember, a reference candle has to be present at a swing, but it doesn't inherently mean that there has to be a swing. Okay, so we've got two possibilities here, obviously. Either it's going to swing or it's not going to swing, which is the obvious thing to say. But the idea here, how do we know when rates are going to come down? How would we know when rates are going to come down? Well, we're going to have to look for a contra signal. We're going to have to look for a contra signal here, Raj. And what's the contra signal? So a contra signal would be a reference candle to the downside. And then I think that's what you're referring to. Then we can kind of ignore, then we ignore the upwards reference candle and we start concentrating on the downwards. But until we get that, Well, it's kind of moving higher, and then we've got uncertainty. So we've got this swing higher followed by uncertainty. In other words, let's call them the yield bulls, weren't able to really decisively take yields up higher last week, right? So, but the idea is, to me, so your question's actually it's a very pertinent question. The question is, okay, we expect rates to come down over the course of the year, but what's happened now is because they're getting priced out later and later in the year, we've got this reference candle to the upside, and that's a problem. Let me just be very careful the way I say that. It's not a problem if you're a dollar bull. If you're a dollar bull, you would enjoy what you're seeing. If you're a stock market bull, that's a problem. As we said last week, that's a problem because theoretically it should act as a drag. What's happening is that the earnings are supporting the stock market, are supporting the stock market. They're more potent, I suppose, than the drag. But ultimately, okay, the yields will ultimately drag. They'll serve up as a headwind. So, and we took a look at it last week. So we'll just put it in the S&P 500 again underneath. I'll take a look at euro in a moment, but you can see S&P 500. And this is what we said last week. Let's just see. Okay, so here is you've got kind of your rates coming down. That's kind of serving as a tailwind. Here you've got your rates coming up. That acts as a headwind. Okay. Yeah, you've got your rates coming down. That's acting as a tailwind. And then here it's where it gets ambiguous. Not ambiguous, it's sort of, it's not behaving as we would expect. It's not behaving as we would expect. In other words, the real rate's moving up here. Theoretically, we should be getting a movement down, but we're not. We are, in fact, getting a movement up. So the question you ask, how is that possible? To me, the explanation is that the earnings are having a bigger effect, having a stronger effect than the yields. But at some stage, if the yields continue to move up, Raj, if they continue to move up, and we don't get that contra, if we don't get that contra, I think that we have to get a push down in the stock market. I think we would have to. So that's sort of a convoluted way of opening your answering your question. I hope I've answered it in an acceptable way. If I haven't, just sort of steer me in the right direction, and I'll try to answer better. But let's just go through to euro. I said we'll take a look at euro. So let's just do a top-down analysis on euro US dollar, and we'll start off with the weekly. And what we have here is almost a mirror image of the US dollar. You can see that whereas there was some sort of downside pressure with the US dollar, there's upside pressure on the euro just over the last 2 weeks. Now you've got the euro with a blue candle, but it's below that black exponential moving average, and the exponential moving average is quite flat, but perhaps there's a slight angle to the downside. Let's just take a look and see what it looks like on the daily chart. All right, so take a look here, and this is going to be quite interesting. So the momentum is to the downside. We're under 50, but we've still got we've got this strong movement up here, don't we? Which ties in with movement here. Okay, so that kind of makes sense. But by and large, we've got a strong downside movement in the euro-US dollar, and that downside movements, the longer term downside movements in the euro-US dollar, makes sense that the RSI is sub 50. Okay, it's just this last leg up that we're seeing reflected in the RSI. Now what we can do is we can go down to the hourly chart, and we can just look for some sort of timing signals here as well. Whether we get them or not, well, we don't want to predict. We'll just react to them, right? So what we can do is we can take a look and see if we're going to get a crossover to the downside with the EMAs. We have a crossover here, but we're still in the wrong quintile. As long as we hold in this, upper quintile, we are completely in the wrong area. But if we get a movement and we go down to the low quintile here, okay, then we will start getting that downward movement. So the question really comes back down to the US dollar. The fact of the matter is that the US dollar has been pulled upwards by the real rate. Now we ask a question, just over the last 2 weeks, there does seem to be some selling tails. Does that mean we've got a dip in the uptrend? If we've got a dip in the uptrend on the dollar, is that support going to hold? I don't know. Let's see if the daily chart signals materialize. Remember, it's a 2-trigger system. And once we get the 2 triggers, then we've got to get the stochastic moving to the right quintile. We've got to get it to the upper quintile for the US dollar. We've got to get it to the lower quintile for the euro. Then we're in business. So that's what we're looking for this morning. That's exactly what we're looking for this morning. Okay. That's, I think, as far as we'll go today. I'm cognizant of time. Tomorrow we'll take a look more at the stock markets, etc., etc. If there's any questions, just go ahead and type those in now. I hope that I answered your questions, to the degree that you wanted them answered. Let us wrap up here. If you enjoyed this, if I may request you just to click on that rocket ship. It helps with the dissemination of the stream. Otherwise, have a great day, a great evening, and we shall do it all again tomorrow morning. So thank you very much, guys, and I look forward to speaking with you tomorrow.